Welcome to This Explainer. Today, we're going to completely shatter the illusion of wealth. We're breaking down the young billionaire mindset, pulling straight from our source text, the architect of wealth, ownership over consumption. Look, if you've ever felt like you're just endlessly running on a financial treadmill, just to keep up appearances, you are absolutely in the right place. Think about it. We see it literally every single day. People leasing that brand new luxury car they can barely afford, swiping credit cards for designer clothes, or booking these crazy extravagant vacations just to post them online. And behind the scenes, zero actual savings, no investments, just a stressful, endless cycle of trying to look successful instead of actually being successful. So in this explainer, we're tearing down that facade. We're going to map out exactly how the ultra-wealthy view capital in a fundamentally different way than the rest of the world. We'll explore why some folks just seem to effortlessly build this lasting wealth, while the vast majority are stuck in a trap of constant consumption. All right, let's jump right into it. Part 1, the illusion of wealth and the crucial mindset shift required to break it. Let's take a look at the fundamental difference in how different groups actually use their money. This brilliantly illustrates the divide we see in the source material. For the masses, the default behavior is pretty predictable, right? They spend money purely to look rich. It's a whole lifestyle built around outward perception, chasing that immediate social validation. Honestly, when the average person gets a bonus or a raise at work, their very first instinct is usually, okay, what can I buy to show people I'm doing well? They upgrade the car, they buy the flashy watch. But billionaires, they operate on a radically different wavelength. Instead of broadcasting their wealth, they are quietly using their capital to build real, lasting assets. It's a profound shift in focus. It moves away from what everyone else can see and focuses entirely on what actually generates value behind closed doors. Real wealth is often totally silent. It's not the loud sports car revving at a red light. It's the quiet index fund. It's a piece of commercial real estate. Or it's equity in a totally boring but highly profitable business. Here's the kicker. When you spend money to look rich, that money is gone. Poof, you've traded your capital for an illusion. But when you spend money to build assets, you're actively buying your future freedom. It's the ultimate difference between loud consumption and quiet accumulation. Moving on to part 2, liabilities versus assets. Let's see how this big picture philosophy trickles down into our concrete, everyday buying habits. There is just a stark contrast in what people actually buy when that paycheck hits their bank account. The average person's buying habits are heavily centered around liabilities. Our source text points out that they spend their time and their hard-earned money chasing temporary trends. And man, we all know how exhausting that is. By design, trends expire. The second you buy the absolute latest tech gadget or that trendy piece of clothing, it immediately starts losing value. You were quite literally throwing money into a sinking ship, all for a really quick hit of dopamine and a little bit of societal approval. But the wealthy, they accumulate entirely different things. They buy businesses, they buy stocks, they buy investments. Instead of chasing a fleeting trend that loses its value the second you swipe your card, they are actively investing in the future. They're looking for things that will appreciate, or better yet, generate cash flow over time. Just think about the massive difference in trajectory here. When you buy a liability, it takes money out of your pocket every single month. Think about the maintenance, the insurance, the depreciation. It adds up. But when a wealthy person buys an asset, that asset actively puts money back into their pocket. Over a lifetime, this divergence in habits creates a wealth gap that's almost impossible to bridge. The average person keeps buying today's liabilities, basically mortgaging their future. Meanwhile, the wealthy are patiently buying tomorrow's security, practically ensuring they never have to stress about money again. Part 3, the one simple rule. We're going to look at the fundamental, paradigm-shifting philosophy about the very nature of money itself. So the absolutely crucial point here is a rule implicitly understood by billionaires everywhere. Money should work harder than people. It's a super short quote from our source, but it carries just incredible weight. See, the average mindset assumes that human labor, trading your physical time for an hourly wage or a yearly salary, is the main engine for generating income. From day one, we're taught to work hard for our money. But the wealthy realize a really powerful truth. Human labor has physical limits. You only have 24 hours in a day. You get tired, you get sick, you need to sleep, and eventually you're gonna want to retire. Capital, on the other hand, capital is the ultimate employee. Your money is a way more efficient worker than you are. It doesn't need to sleep, it doesn't take vacations, it literally never calls in sick, and it absolutely does not clock out at 5 p.m. It works for you 24 hours a day, 7 days a week, just compounding and growing in the background. The goal of the wealthy isn't to work harder. It's to deploy an army of dollars to do the heavy lifting, so they simply don't have to. And this defining principle reveals exactly why the wealthy focus entirely on ownership, rather than just relying on a standard salary to secure their future. Prioritizing ownership means putting your focus on businesses, equity, and future value over a traditional paycheck. Look, a standard salary, no matter how high it is fundamentally capped by the sheer amount of time you can physically work in a given week. Sure, it provides a comforting illusion of security, but it actually prevents ultimate freedom because you're always forced to trade your single most precious resource, your time, for money. Ownership, however, scales completely independently of your time. By owning assets, whether that's real estate, shares in an index fund, or a piece of a private company, you are capturing the long-term value generated by that hardworking capital we just talked about. Let's say a business you own equity in suddenly doubles its profits. Well, your wealth just grew, and you didn't have to work double the hours to make it happen. That right there is the magic of the billionaire focus. They aren't looking for a bigger paycheck. They are relentlessly hunting for a larger slice of ownership.
Part 4. Consumer or Owner, the Tragic Reality. As we reach the culmination of this analysis, we really have to confront a harsh truth about the majority of society.
Our source points out a truly scary fact about everything we've just discussed. Most people never learn this. Just pause and think about the immense gravity of that statement. The vast majority of people will go through their entire lives working tirelessly day after day, year after year, and they will never uncover this fundamental truth about how money actually functions. Why is that? Well, it's largely because our traditional education system is really designed to produce good employees, not owners. We're taught how to follow instructions, get good grades, and secure a safe job with a reliable salary. Now, combine that with the relentless societal pressure and those multi-billion-dollar advertising industries constantly telling us that happiness is found in consuming the next new product, the trap is perfectly set. Millions remain permanently stuck in the cycle of acquiring liabilities and chasing temporary trends simply because this critical shift in perspective, moving from spending to owning, is just never taught to them. They stay on the treadmill forever, exhausted, because they literally don't know there's an exit ramp available. To wrap up this explainer, I want to leave you to reflect on one final, deeply provocative question straight from our text, just to challenge your everyday mindset. Do you think like a consumer or an owner? This is the ultimate litmus test for the wealth-building mindset we've been analyzing today. The next time you make a financial decision, whether you're receiving a paycheck, getting a nice bonus, or just feeling that sudden urge to make a really large purchase, pause. Ask yourself which side of the equation you fall on. Are you buying just to look rich for a fleeting moment? Or are you buying to build lasting assets? Are you consuming for the dopamine hit of today? Or are you claiming ownership for the security of tomorrow? Thank you so much for joining me as we unpacked these source concepts. Keep questioning the norm and keep building that owner's mindset. Catch you next time.